Japan once ruled the financial world. Tokyo's skyline glowed like the future. Real estate was worth more than entire countries. The Emperor's Palace, just the land beneath it, was said to be worth more than all of California. And then, it all vanished. One of the greatest bubbles in human history popped, wiping out $10 trillion in wealth. This is the story of the day Japan's dream turned into a nightmare. After World War II, Japan was destroyed, cities in ruins, economy in ashes. But from that destruction, something incredible happened. Factories rose, technology boomed. By the 1980s, Japan wasn't just back, it was unstoppable. Sony, Toyota, Honda, global giants. The world looked east in awe, and money poured into Tokyo like a flood. The Bank of Japan cut interest rates to fuel growth. Cheap money flooded the market. Everyone was buying land, stocks, anything with value. Banks lent recklessly. Speculators borrowed more to buy even more. Tokyo real estate prices soared so high that a single square meter in the Ginza district could buy a house in New York. Investors believed the good times would never end. They called it the Japanese economic miracle. But miracles don't last forever. By 1989, the Tokyo Stock Exchange hit record highs. The Nikkei index touched 39,000 points. Japan's economy was now the envy of the planet. Politicians, businessmen, even taxi drivers were trading stocks. Then, the government got nervous. Inflation was creeping in. So, the Bank of Japan raised interest rates. Just a little. That little turned out to be the needle that burst the biggest financial bubble Japan had ever seen. It started quietly. A few traders sold, then a few more. By March 1990, panic hit. The Nikkei collapsed. Stock prices fell like dominoes. Real estate, once worth more than nations, crashed 80%. The wealth of an entire generation evaporated. People who thought they were millionaires suddenly had nothing. Banks were loaded with bad loans, and Japan's miracle turned into a long, dark silence. The crash didn't end in 1 year. It lasted decades. Japan entered what economists now call the lost decades. Growth froze. Deflation set in. Young people stopped spending. Suicide rates spiked. Entire towns vanished. For 30 years, Japan tried everything. Zero interest rates, government stimulus, even printing money. Nothing fully worked. The bubble's shadow never truly left. The $10 trillion mistake wasn't just about greed, it was about belief. A belief that the future could only go up. That markets always reward optimism. But bubbles don't burst when people are wrong. They burst when people stop questioning. Japan taught the world that no empire, financial or otherwise, is immune to gravity. Every modern market crash carries Japan's fingerprints. The 2008 housing crisis, the crypto booms and busts, even Wall Street's tech frenzy, all echoes of Tokyo's rise and fall. History doesn't repeat itself, but it rhymes, loudly. Japan rebuilt again, this time quietly. Not with wild speculation, but with resilience, discipline, and innovation. Today, the skyline still shines, but the lesson remains carved in Tokyo's glass towers. No market is invincible. No miracle lasts forever. And sometimes, the biggest mistake a nation can make is believing it can't fall.